Hello everyone, this is Arif and today we are here with another video of CIA part 1, and in our today's video we will be covering unit 8, which is about control types. This is a brief introduction of my profile and career trajectory. Just in case if you are interested, you can pause this video and read to know more about me, or we can also connect via LinkedIn. Here we are with a brief snapshot of CIA Part 1 entire syllabus. In CIA Part 1, we have so far covered foundation of internal audit. Then we discuss about there are two types of assurance services or engagements which is being performed by internal audit: assurance services and advisory services. We also cover about ethics and professionalism. And in our today's video and also in our previous few videos, we are about to cover topics related to GRC, governance, risk and controls. So far we have covered governance, risk, and there will be 2 units on controls. So today in today's video series we will cover the first part, types of controls, and then we will have another one which is control application that we will cover in the second last unit of this entire series, remaining only then fraud risk. This is the overall snapshot of the entire CIA units which we are covering in the CIA video lecture series. Out of 10 units, we have covered so far 7 units, and by the end of today's video lecture, we would be close to 8 units, which approximately made around 80% of the entire syllabus. And in terms of MCQs, expect 105 MCQs to appear from these earlier units that we have already covered. Today's topic is about the controls type, and this you can expect around 5 MCQs, 5 to 7 MCQs from this unit, which make it around 5% of the entire syllabus. So this is a brief snapshot in terms of our journey so far in CIA Part 1 video series lectures. Here is the overall syllabus, the key topics that we will be covering in our today's unit, which is control types. Mainly, we will cover 2 aspects of the controls. The first one is about the overview, which will cover the purpose, definitions, what is control, what is control environment, risk and control metrics, role and responsibility related to controls, limitation of controls, and evaluation of the controls. Also, we will be covering the characteristic of audit trail, segregation of duties, manual versus automated. However, on the other section of the controls, we will be discussing different classification of controls, which means that we can classify the controls by different means. We can classify the controls into primary and secondary controls, or we can classify the controls based on different hierarchical level within the organization. Time-based controls we can classify through financial and operational controls, people or system controls, and in the end we will talk a little bit about the IT controls. In IT controls we have general controls and application controls, and we need to know about what are the processing modes in IT environment. So this is the overall summary of the entire topic that we will be covering in our today video. It is important to understand in our first section of the unit, I believe 8, control overview, to understand what is the purpose of a control. Basically, control could be a system, a process, required action plan or guideline to be followed by the management in order to ensure it helps us to ensure the accuracy or reliability of the data which is produced during different processes within the organization in terms of the record generated or the information which is being shared. It also ensures the compliance with the applicable policies, procedures, regulations, laws. It helps us to safeguard the company assets. It also supports the top management decision making. Now we will look at what exactly is control. So controls are any action by the management or the board to manage risk and increase likelihood of achieving objectives. So basically, whenever we have any organization that we establish, the main purpose of the organization is to achieve and maximize the profit of their shareholder and to provide benefit in most ethical manner and in most environmentally friendly manner to their wide stakeholders. Stakeholders could be the employees that work for the company, the society in which they are working, the community in which they are based in. So suppliers, customers, so everyone benefit in terms of ethical business conduct. So basically, what it says that the controls enable us to manage the achieve organizational objectives. So whenever an organization operates in any form or structure, there are a lot of risks that the objectives could derail or the organization action could derail to achieve the organizational objectives. And these risks are inherently there or due to certain use of technology, human judgment, and all similar situations. So controls enable us to manage those risks and to enable the success of the organization. In terms of processes, what are the key things that we use to have controls? We use certain policies and procedures because these policies and procedures basically enable us or guide us to do how to do the things or how to do the job in a way that does not or that in a way that mitigate the risk of going wrong to achieve any objectives. So policies and procedures are also known as directive control because they highlight what are the key actions that everyone is supposed to take. And it's also a very good kind of, it's a directive, but again, as a preventive control as well, because the expert has already assessed the process and they realize if it is done in a certain manner, then there is high likelihood of achieving the objectives of that process. So it is already, all the controls are embedded in those processes, and those processes are reflected through the action plan, through policies and procedures. So that in its own way is a control mechanism within a company. Then there are certain activity designed to manage the risk within tolerance. So it is not that we always try to minimize any risk to a zero level, but sometimes we have to manage or accept the risk. They say if we minimize every risk to the zero, then the organization is bound to fail because then there will be no action that is taking place. Because doing a business in its own is a risky decision. But what we are supposed to do is to manage the risk within a tolerance limit. Tolerance limits mean that the organization has the capacity to rebound even if a loss incur or if a mistake happens. They are able to sustain and come back and learn from those mistakes. So the purpose of risk management within any organization is not to turn all the high risk into low risk, but is to manage. And we manage through what? We define different levels, which we have covered in our previous units. We define different levels, and each level, the first level is like tolerable, and then there is something which we call is a yellow line, or where we have to be more sensitive and take action, and then there are red lines which we shouldn't cross. So this is the main purpose of having controls. Control environment, basically whenever we try to assess an organization in terms of controls, we see what are the control environment, or you can say what is the risk maturity of the organization. If the organization we classify is a risk mature organization, then it means they have effective controls to manage their processes. And if we classify organization is less risk mature, which means their controls are not effective or not defined or designed in a proper way. Some of the key elements related to control environment is down at the top, that the leaders of the organization, be it the board members, be it the CEO or the top management, they lead by example. They do not enforce an ethical decision on you, but however they are doing something unethical. So they have to lead by a good example. Then it's about in honesty, that they are doing their job with honesty, and the same is reflected everywhere in the organization, that people should do their job with full integrity and honesty. Ethically we have to do, because sometimes ethics are the gray areas within the organization. Sometimes it could be okay, under the law, because the law could not come across and define each and every situation and to form a law. So law is generally, in most of the cases, laws are basically the bare minimum ethical standard. And then there are ethics, which is that you yourself take an ethical or ethical judgment about situation, and you try to take the best course of action. So those ethical, for example, if you believe that the product which you have made, for example, you have developed a recipe of a medicine, and that medicine will have a certain kind of minor side effects in certain condition to someone. It is ethical to highlight those conditions as a disclaimer. So whenever the doctor prescribes such medicine, people with certain kind of those limitations, they shouldn't prescribe to. But those are minor conditions, and it is not life-threatening, so you cannot just ignore ethically. Maybe by the law, maybe it's okay, or the law does not punish you for that, but ethically you should. So this is kind of certain decision within the company that we have to take it ethically. Similarly, for example, you can hire the employee at the cheapest possible salary wage rate, because there is a lot of unemployment, and you are bare minimum maintaining the government stated bare minimum wage per hour. But it doesn't mean that you have to stick to that law. If you can help them and you're generating a lot of profit, then you can raise your salary to increase your benefits. So these are ethical decisions that reflects if the organization is more ethical and they are taking care of the people, customers, and suppliers. Then it reflects that they have a good control environment. Then the structure, how the organization is structured. For example, for a large complex organization, you need to have a more bureaucratic structure, a tall organization. For a startup or the companies which require you to have more creativity, for example, media industry, arts, for example, making movies and all, there bureaucracy will eat the idea. So you need to have more flat organization, for example, software houses or architects. So the right structure also reflect a good control environment within the organization. Management style, how would you be more bureaucratic, democratic, authoritative? It depends how management's consultative management style is appropriate to your organization. The HR policies, human resource policies, that's also reflect a good control environment if it is good in the best interest of people in society. And competence of personnel, so you just hire the right people with the right skills for the right job. So these are some of the key indicators by which you can assess the control environment. It doesn't mean that we stop here. There are a lot of other areas that we can look into it. For example, delegation of authority, in terms of performance appraisals, management reporting, independence of board members, different committees, independent internal audit department, and so on and so forth. There are a lot of factors, but here we are just focusing on a few for your understanding. What are the key control environments? Risk and control metrics are being developed within the organization by risk managers and by internal auditors, and sometimes by the compliance and legal team themselves. But the main purpose of this is to align the risk within those processes with the key objective of the organization, and see if those risks materialize, how badly they can impact the organizational objectives. And there might be some other risk which might have very minor or limited exposure to the objective. So because we have limited resources within the organization and we want to deploy to the best optimal way, therefore those RCMs are important, because they focus our limited resources to be much optimally be used for the risk which could pose major threat to achieving the organizational objectives. There are limitations to controls, no matter how good the organization have policies, procedures, structures, system controls. At the end, human people are involved within the processes, and humans are sometimes biased, sometimes they have unintentional errors. So these are limitations. Management can also override controls. For example, I have witnessed in many organizations there are robust ERP systems employed, for example, SAP or Oracle, but then the management override the controls either through some review and approval outside the system, or disabling some of the mandatory controls within the systems. So these actions carried out by the management also lead to poor control environment. Collusion may happen. For example, we segregate the one who prepare and the one who sign the check. But if these two people together want to commit a fraud, so the one who signs and the one who prepared, the one who review, and the one who signed the check, if they three are involved in to do something harm, then the control is defeated, because no one will report any one of their friend mistakes. So this collusion could be also a limitation to control environment. And the last one is about cost and versus benefit. Sometime you have to accept the risk the way it is, or sometimes you cannot mitigate the risk to the lowest possible way, because the benefit of achieving those minimum risk level would not, or the cost will override the benefit. For example, if you have a petty cash of 50,000 in any currency, you can take it, and the company deals in billions and billions of dollars, so they can have save for that amount of cash, but you cannot hire one security guard for that save. You cannot have some very advanced level controls, for example, some high-tech technology that may even cost you more than 50,000 to have controls over 50,000. and put that safe in a big room or anything like that, you would have a reasonable controls. For example, you would ensure that there is a responsible person who is taking care of the petty cash. That person background check has been done. There is a review and approval process for petty cash. All the petty cash reimbursement is done based on providing the original receipts for reimbursement. There could be a surprise audit. So these are reasonable controls, but you cannot extend like the way you take care of 10 million or 200 million. There is a different level of controls that you deploy based on the risk, the cost and the benefit. So this is very much important, and sometimes those cost benefit could lead to some limitation to the controls. Lastly, who are responsible for controls? So the senior management is responsible for establishing those controls through policies, procedures, and systems, and guiding or reflecting to their behaviors, leading by examples. Then the manager is supposed to assess those controls in terms of whether they are working or not, and to also effectively apply those controls within their processes. Internal auditor basically responsible for the independent check and balance of those controls. We provide assurance whether those controls are effectively designed and operating effectively or not. So these are some of the key roles and responsibility related to controls. Some more key elements related to the control evaluation of the controls is basically focused on how effective and efficient the current controls are. So whenever we as an internal auditor review those control designs, we see whether they are effective and efficient or not, because we do not want to overly control some areas which will impact in terms of cost and time consumption. So we have to have the right balance. So sometime independently we see whether the controls are operating effectively and efficiently or not. And also time to time we have to assess how we can improve the controls. So these are different ways by which we can evaluate for different purpose the controls, also for the cost effectiveness as well. Audit trail is basically in different in any organization there are multiple types of transactions that are happening. So we as an internal auditor and the management as well, they have to keep record of all those transactions and activities that they are performing in order for us to trace back those transactions to the source, in order to identify if there was any unauthorized person in the process which has changed anything or distorted any document or any information. So it is very important controls that is deployed by the management. Segregation of duties is another one. In any high risk activity, we try to segregate and deploy people within the processes, so there is less likelihood of any fraud or misappropriation. Generally, you would say in treasury or cash related transactions or activities, we deploy different people. The one who approves the payments is different than the one who prepares the check. Such kind of segregation. In procurement, for example, the one who selects the vendor, the one who issues the PO, the one who approves the invoice payment and the payments in itself, these are different people at a different level. So segregation of duties in its own is a control, and which helps us to reduce fraud and errors. Having said that, in the previous slide we discussed about collusion. So if these multiple people within the chain of activity, they decided to all collide together and do something wrong, so these are the limitations, then they might perform something wrong. Manual versus automated controls. So manual controls are very good, where we need human judgment, and where the transactions are not routine. So there we can deploy manual controls. However, it has the same limitation that human judgments are involved, so the decision from person to person could be differ, and it is usually for non-routine tasks. Automated controls basically we deploy for high volume, routine, and predictable tasks. So if we have to do a similar transaction at a certain limits, for example, if your salary is presumably 10,000 per month, and you apply for a loan. So if the bank has a table where they say anyone who is employed and has 10,000 of loan, they can apply up to 1 million, 10,000 per month, so 120,000 per year. So they can be granted up to 1 million of loan. So any applicant who comes and asks for any amount of loan, and if you see if it falls within this threshold, so we can deploy system-based control. So we can just insert his salary details, and the system can tell us to what extent we can grant them a loan. So such kind of routine activities could be automated. However, there are sometimes exceptions to those activities, where we take those certain decisions out of the system. But again, for those activities, we need to have proper guideline or policies. What are the exceptions, and what is the procedure to take approvals within the hierarchy for those exceptions, and the documentation and justification of those exceptions. Because tomorrow, when we as an internal auditor, we go and we see certain exceptions, then we ask for those reasoning and documentation and supporting documents. So these are some of the key basic overview, certain topics related to controls. And the next upcoming slide, we will be discussing about types of controls. The next slide I have recorded some time earlier, so you might find it in a with a different background, and with a different with a different background, and so I just club in those slides with this one just to save time and be more efficient. So it comprehensively cover the different types of controls. The thing, if I felt anything that is missing out of that slide, I will cover in the subsequent slide in the same video. So let's begin with the different types of controls. Controls could be defined into different groups or categories through different angle and perspective. In the previous slide, we talked about manual and automated control and the characteristic of both. Here we will talk about primary and secondary and some other classification of controls. In the primary controls, basically these are the primary one, as goes with the name, and there are 4 types: preventive, detective, corrective, and directive. Preventive control is when we place a control to ensure that a negative event doesn't happen. For example, we install a fire alarm, we place a lock on the door, we put password in our computer just that no unauthorized person access. So these are different types of preventive control. Detective control is when the event happened, then we ensure that everything happened as per the standards or as per the desired intent. Example could be that we carry out a bank reconciliation to ensure that all the money is properly dealt with, and there is proper in and out of the cash. The another example could be when we carry out a variance analysis, when we ensure that why there is a deviation, and to ensure that there is no deviation, we carried out an analysis. Corrective control is when the event happened and we are exposed to the risk. So now what happened, we try to go back and to review that situation and to understand that what caused that event, and was there any control, and why there was a control failure, or there was an absence of control, and we try to ensure or to place a control there. So that is called corrective control. Directive control are basically the way by which we enable the individual to behave in certain way in order to ensure to be in compliance with the standards or the desired action. Some of the example of directive control are policies and procedures, job training, and job descriptions. So these are the way of directive control. Secondary controls are basically a classification which assist or complement the primary control. So we have compensatory control, which are basically, what if the primary control fails, then we have a second layer of control. One of the good example or very easy example would be your cell phone. So whenever your thumb impression doesn't work, it asks for a pin, right? So this is a compensatory control. So if one control doesn't work, you can have another control. Complementary controls could be when you place one control over another just to complement the control. It could be that one of the example I would share, for example, I went for a bank auditing, and there I went, and the ATM machine basically have its own controls in terms of proper how much amount we put in there, how much withdrawals has been happened. So everything is automatically controlled. But at the day end, I observe, and this is one of the audit procedures, that the bank personnel, they also ensure that they reconcile all the amounts in and out of the ATM machine. And so this is an additional control they perform despite there is a system control. So this type of controls are called complementary control. Control could be placed at the entity level, at the top organizational level, process level, or transaction level. Entity level controls could be through having a proper established organizational structure. In the structure, we can have a board, and we can have audit committees. So this is all part of the entity level. We can have a business plan, so no one deviate from what they are supposed to achieve. We can have business philosophies, ethical values. So this is all part of the entity level controls. Process level controls could be where we ensure that within a process, for example, hiring process or procurement process or production process, that there are controls within that process. Transaction level, when we look at one activity of that process. So we have a procurement process, but when you make one single purchase, what are the controls while making a single purchase or single procurement order? So this is called a transaction level control. Then the other way of looking at control is from time perspective. Feedback controls could be learning from the past mistake. Concurrent controls could be reviewing ongoing activity, monitoring real time. So this could be a way of looking at the controls. And feed forward control could be, as we have said, directive control could be anticipating an issue and trying to place certain direction, or in order to guide and govern the behavior of the people through SOPs or guidelines or through regulations or job description and training. Another classification could be through financial and operational controls. Financial controls, as it goes with the name, it basically focuses on the finance, on the money part of the company or finance part of the company. It revolves around the accounting principles, proper authorization, recording, bookkeeping, safeguarding of the assets, and they take into account of the laws and regulation and the standards. Operational controls controls could be through what are the operational activities happening within the organization. Could it be through production line? It could be any other operational, fleet management. It could be people management. It could be. So this is all part of the any controls which are placed in those areas of the business are called operational. Anything other than financial could be classified under operational. So this is a few example how we can classify in controls. So you should be aware of broadly that what are the controls and how you can classify controls into different categories. Some other ways by which you can classify controls are people or system-based control, as we have discussed earlier. Manual and automated could be the same criteria. We can use it. In system controls, we have general controls, and then we have application controls. The general controls are logical access when you try to access your computer or an application. What are the basic logical passwords and all? System development related controls, change management. If you want to change something, what are the key criteria do you have to fulfill? Security controls and backups. So these are part of the general controls. Application controls pertains to when you are using an app and the controls which are defined within the app. For example, input controls. There are certain fields where you cannot put an alphabet. They only ask you to put the numbers, for example, telephone number. And there might be a restricted number of characters that you can put. Or for example, so these are all types of input controls. Processing controls could be where when you are using this app, that no two people can change this in the data at the same time. There could be another way, like another control could be that any changes made by the person will be recorded by its identity. So any changes which are being made. So this is types of processing control. Output control could be through totals, that whether the total is correctly coming or not, whether there is a zero balance in the accounts or not, sequence check, range check. So there are different types of controls. Integrity control, where we ensure that the information which we have stored is the output basically is correct and stored in a very secure manner. So this is called integrity check or integrity control. Management trails are very important in terms of controls, which means that we track the output with the source document, or we take the source document and we reach out to the final outcome. So this is also one of the very important way in the application control. For example, for a payment, you go to the source document requisition, and from a requisition you can go to the payment, vice versa. So this is called transaction trail or management trail. So these are different types of controls that you can classify under different categories. In the earlier slide, we have discussed different types of IT general controls and application controls. It is important to understand another IT concept in terms of controls. Within the IT environment, either the transaction are happening real time or at certain interval of time, which is also known as batch processing. Batch processing is when we do periodically certain activities within the business environment. For example, payroll are being generated either bi-monthly or monthly, depending on different organization and based on the regulations. So that is done after 15 days or after 30 days periodically. However, there is another way of execution of the transaction within the IT environment is real time. For example, this could be applied in ticketing, hotel reservation, airline reservation, customer sometime complaints or customer interactions, ride hailing. For example, if you are intending to hire Uber, so that happens on a real time. And this is important to understand within the IT environment uh, for any transaction that you are intending to audit, whether it's happening at a batch level or at a real time, because at the real time we do not have much time to correct in case of any fault that happen, and we are very in a high risk environment. If anything goes wrong, it will have a direct impact and expose us to a loss, whereas in batch we might have some leeway in terms of correcting our mistakes. However, at the same time, batch could cost us more because this is a consolidated, a big amount of transactions that happens at one. So a small minor mistakes of calculation in the system could have a big financial loss. So you have to see the transactions and its processing mode, and that will reflect what are the risk exposure to each type of transactions and the type of controls that is required. So in a real time, you need to have more preventive controls. In the batch processing, you can have more detective or corrective controls, though you still wanted to have a preventive, but you still could have some ways of detection as well. For example, reconciliations, that kind of a thing. So it is important to understand. With the last topic discussion, we have ended our entire discussion of the CIA unit 8, I believe, which is about control types, and we have covered the overview of the controls and different types of controls. And within the different types of controls, we have seen that how we can classify controls in a different scenarios or through different classification. We also have gone through some of the IT related controls, and which is very much important for you to understand, because I have seen a couple of questions come from the IT type of control gaps in the MCQs. With this, we have somehow covered almost 80% of the entire syllabus, and we are well progressing toward completing the entire CIA part 1 unit 8, or the entire video series of CIA part 1. We will end this video here and hope to catch up with you in the next video, in which we will talk about controls application, and then we'll be remaining only with one unit, which is fraud risk. Till next time, take care of yourself. Remember me in your prayers. I usually put all the summary notes within the link of the description of the video, so you can download for free from there. And remember me and my family in your prayers, and pray for me that I am able and have still time and motivated to cover this entire series for you people. And yeah, see you till next time. Take care. Bye bye.